Good morning and welcome to this weekly market update from AGM Markets. Today is the 18th of June 2013. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss dollar yen, Euro pound and dollar CAD. We'll just be mainly focusing on technical analysis, review what's been going on in the markets, try and point out any interesting setups that I'm personally looking at, and hopefully it'll be of some use to you. For any new followers, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the blue is a 100 simple moving average, and the gold is the 200. We'll not make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website at www.agmmarkets.com. Okay, and this is the euro dollar chart. What have we been speaking about in previous videos has been the 2 fibs. So you have this one here from highs to lows. Sorry, my computer's just being funny there. So you have this one here from highs to lows, which was initially being capped at the 50% retracement at one spot, 32.27. That got sold off, and now we are above this now, above the 50% and even above this 61.8% retracement as well. So it's really just been grinding higher, this euro dollar chart. I'm just going to flip it to a weekly here and zoom in, and you can see, well, last week's weekly candle just closed below the 61.8 actually, so that's quite interesting to note. You can see if I just move it wider. So yeah, so just finished under. So technically speaking, this week's candle could come, if it closes below the 61.8, then the candlestick, there will be a weekly candle close below, which would still mean that in terms of this setup, if you're looking at the weekly chart and your weekly trend of players, will say the setup is still intact. But it does look bullish on the daily, in my opinion. If you we'll just flip it to this chart. I mean, normally daily candles are strong enough strong enough in terms of if you get a daily close above, but it depends what chart you're focusing on. If you just look at weekly charts, and you'll just be focusing on the weekly time frames. If we do get a retracement, which I think it is due, I mean, it doesn't have to, it can just keep on grinding higher and higher. So let's say if we do get a retracement, this is the fib that I'd personally be looking at, and I think will be very popular amongst traders. This is the clear sort of recent swing low to high, and if that comes down, the one spot 30.94 is the 50% there. Of course, it can pop higher, and all you need to do is just extend your fib tool higher. So delete this. So yeah, that's all I'm really focused at. I mean, in terms of the daily, it's good to keep context. I mean, if you look at 4 hour, it has been quite choppy. And of course, trendline support players will be keeping an eye on that one. But I think recently this sort of area here has been quite choppy. So if you're looking, I mean, personally, I wouldn't really want to be buying these highs. I prefer to look at a retracement to then buy, and that would be the setup, that fib that I drew up from those lows there to the highs. There's similar sort of things been happening on cable, really. I mean, in terms of daily chart, it's just been grinding higher and higher. So similar sort of fib, really. If you get a retracement, would be this one here. It looks like it is starting to retrace as we speak. Of course, you've got the 200-day moving average there, which of course could act as support. It did act as a resistance here briefly, and then of course you have this high around here, these highs here, which could also act as support as well. But if you're looking at fibs, that would be the one that'd be the setup I'd be looking out for in terms of any buying opportunity. But what we do also have, I think this is a fib. Actually, no, it's not. The highs to lows, we initially got capped up here, didn't we, at the 50% at one spot, 56.04. And that sold off, and then we've just grinded hard. We've closed above this 50%. It did initially spike up, close below, got a daily candle which has sold off briefly, 100 pips or so, but then we've grinded higher and closed above. So really, I mean, that fib is not really of any interest. The dollar has been very weak. You could say in terms of fundamentals because of the QE, what have you. So yeah, this is the one that I'm looking at personally. This one here, from lows to highs. If we do retrace, it'll be interesting to see what happens at that 50%. If we get there, of course, we could bounce off the 200-day moving average or that new support. I'll draw it up again around here. So that's my focus for cable. Dollar Swiss. In overall, in terms of this chart, it is just quite sideways. I mean, it's in a range of sort of a 700 pip range if you look from the highs. This chart around here to the lows, it has been a sort of sideways chart. But it looks like the bears are in control here. I mean, we had this fib from lows to highs here. That got bought up. We broke above and grinded higher. And then the newer fib, a lot of people would have been looking at, I would have thought, would have been from these lows to the highs there, because that's the low dip of that previous 50%. Initially got held at the 50%, popped up a bit, but we broke lower and closed below, so that fib is now intact. So I'd say if we got any bounces higher, similar to euro dollar, of course, as we say, these charts do tend to mirror each other. So euro dollar, we're looking for a sell-off for a bounce. Here we're looking for a pop-up and see what happens if we get up to this 50%. This will personally be the fib I'd be looking at. Of course, you have the moving averages here, so we could just bounce up and react off one of these and sell off. But in terms of fibs, this would be the one that I'd personally be looking at on the dollar Swiss. And I don't think, if you want to go down to smaller time frames, it's getting a bit messy. I think it's good to keep context. And of course, there are little dips here, but I personally find it tricky to choose which dip to look at. If you look at the 1 hour, it's quite messy and quite choppy, really. So I mean, in terms of fibs, I personally look at the daily. It's clearer for context. It clearer moves, really more obvious moves to choose, in my opinion. Let's look at the dollar yen. Dollar yen, we've been saying it has been overdue a retracement. I mean, it was just in dip buying mode, but eventually these dips were going to get eventually sold off and not work as well, and that's what's happening. If you look at the weekly, and if you look at the one clear fib I'm personally looking at for here is this one here from the lows to highs, or you could, if you want to look for the real clear swing, then you can drag it down to low here. But of course, we're a long way away from that. But I would not be surprised, because it is looking bearish, I think. And it is looking like it wants to keep on coming down. The candle action, in my opinion, looks like it's just going to get keeping on getting sold off. It may want to come down to this 200-day moving average here. But of course, this 50% does coincide with a 90 handle as well. So maybe it could come down there. It could be interesting to see. If you look at shorter term time frames, then a lot of people will just be selling these dips. Wouldn't be surprised to see if we pop up and test this 50% here. That would be a recent swing, which is at 96.54 for a selling opportunity. It could be quite an interesting one there. Because I think the previous one, I think it has been playing 50%. Yeah, it has been. So that's a swing there. Sold off at the 50% and broke lower, and even this little one up here, that was a 61.8. But you can see it's been playing the dips, but they're not as easy to see. I mean, some people it may just come easy to the eye. I've been trading fibs for quite a while, so it comes to quite easy to the eye. I mean, it then just to choosing the swing. So from there, you could then use that high there, and then draw to a new low, for example, there, and that's where you get your swing highs and lows. But everyone's different, of course. Anyway, I'm going off on a sideways tangent here. So yeah, for dollar yen on the daily, it's all about this fib here for me. And if you want to look at shorter term time frames, the 4 hour, then it's just selling the dips, really. I wouldn't be surprised to see it come into this 50% eventually. Of course, it doesn't have to. It may just come down to this 200-day moving average. and pop up. I wouldn't be surprised to see it continue to retrace. It does look like it wants to if you look at that weekly. So still a long way away from these moving averages here. So yeah, that's my dollar yen outlook. Euro sterling's been an interesting chart. Well, it has been quite choppy, but if you look at that's why it's good to look at the longer term time frames, in my opinion. And if you can see here, this fib from the highs to the lows, these lows here, and I'm just going to extend that a little bit wider so you can see. So that one there got sold off at the 50%. And then if you move it to the new low here, again 50%, lots of spikes there. You'll see it's clear if I zoom in. Lots of spikes at this 50% level at 0.8593, and it's selling off, but it is starting to bounce. And guess where it is bouncing? I'll just delete this one. It's bouncing at this one here from the lows, that swing low to the highs there, right off the fib level, this 61.8, pretty much to the pip, and we're getting a decent bounce higher now, rotation higher, looking to take out those highs in my opinion at the 0.9586. You can actually see that quite well on the 4 hour if you zoom out. It pretty much fills up your whole chart. I think these ones are quite good. It's the fibs which are just purely from the low of the chart to the high of the chart. They tend to be the obvious ones, better in my opinion. You can see that spike there, that candle spike there to the pip. If you're looking at candle reversals, that would have been a lovely one to trade off of there. Nice 4 hour reversal, nice hammer. And it's ripped up higher here, so it looks like it's just going to fly, that one. Technical chart that. Last forex pair we'll look at is this dollar CAD chart. Dollar CAD's been quite interesting. We've spoken about before. This it's just been playing fibs here. So you got that first swing there from lows to highs, 50% got bought up, and then if you extend it to the next one, the next high, and then draw your low from where it bounced off of. So the dip, basically. Let's draw that a bit wider so you can see clearer. Again, came off the 61.8 to the pip pretty much, and ripped higher, and we're now a new dip is in play in my opinion. So you got that from that low to high there. Hasn't been pretty much to the pip, but you can see buyers are trying to come in. But maybe that one may not work as well, because maybe it wants to come down to this trendline support, as you can see there. That's why these previous two fibs were so good, because they were confluence zones, so you had them off a fib level and off a trendline support as well. So this is why maybe this fib may want to come down first and test the trendline support before popping up. But no, it's been a very technical chart. That it's very clear to the eye, this daily chart. I mean, if you flip it to the 1 hour, it's a bit much more choppier in my opinion, and even the 4 hours is quite obvious because it's just that low there to the high. So that's why I think if you're struggling for context, it's always decent to zoom out in my opinion, and the charts get much clearer, I think. Okay, that's all for today. I hope you found that interesting and useful. If there's any other pairs that you want to have a look at next week, if there's any other pairs that you want me to do some technical analysis on, then feel free to comment under the YouTube video, or send us a tweet to our Twitter feed, which is at AGM Markets. Thanks for watching. Hope you enjoyed that. Catch you next week. Thank you.